Hello, members. I'm Kavita Agrawal, and welcome once again to our Friday's Market Outlook series, where I give you live analysis of Bank Nifty, and we go over the intersector chart analysis. The objective of doing the whole analysis every week is to stay on top of how the market has behaved and know what to expect. This week, naturally, Nifty, Bank Nifty, and the entire stock market in general has experienced a wonderful rally. And today we touched the level of 18,000. So quickly, let's move towards the chart of Nifty, after which we'll look at the chart of Bank Nifty, followed by the sector charts. And at the end of the session, I will take care of your stock queries. So don't forget to drop them in the comments. And before wrapping up the session, I'll help you resolve all of them. So now I'll change my screen to move to the charts. All right, I hope you can see my screen very clearly now. Fantastic. So this is the 3-minute chart of the index Nifty, and you can see the price action that unfolded since Monday. So this was the day of Monday, and you can see from on Monday itself, we saw a very strong rally of 150 points, which then continued all the way up to roughly 200 points on Tuesday. Wednesday was a bit of a downer, but then Thursday and Friday have seen pretty much what we can call one-sided rally in the index. Now, this rally is all credit to the central bank policies and news that has been coming in. That is at least what I am accrediting the rally towards. Let's move on to the 15 minutes chart and see if there is any interesting story to be heard. Here on the 15-minute chart, the momentum in RSI is just amazing. We can see the 15-minute chart RSI, the momentum indicator is touching the level of 70. There is no negative divergence, anywhere in sight. Last time we had noticed the negative divergence around the level of 17,800. And as a result of that, 17,800 had become a significant resistance in this upward rally as well. And we saw the index taking hit from the 17,800 rise until it finally breached it and continued to go into a superb rally. So now what we can expect is the next resistance is marked right here on the chart, which is the level of 18,000. Now, if you ask why 18,000, specifically because 18,000 has acted as multiple supports and resistances in the past. However, I consider the level of 18,000 as a more of a soft resistance. The real resistance for the price for the index will come at 18,200. And if you take a look at the momentum right now, I really don't see the index stopping for the next 200 points rally. So my short-term view on the index remains bullish. And if you're aware of my profile, I am a short-term swing trader, and that is also what I give services in. So for all my active positions, I am maintaining strict trailing stop losses, and I'm also moving the targets higher and up because the market is in wonderful momentum, and for momentum traders like me, this kind of market scenario is a gift. Now let's move on to 75-minute charts. The 75-minute chart. So again, the 75-minute chart is repeating the same story, that there is wonderful momentum and we can expect that the momentum is going to stay in power for some more time. So in the market, let's look out for the resistance at the level of 18,200. Now we have moved to the daily chart. So on the daily chart, again, the daily chart says a very interesting story, something which maybe a lot of people may not agree with. Basically what the daily chart is saying, that the correction that we witnessed all the way from the peak of roughly 18,800 to the support of 16,800 was nothing more than the correction of this up wave that we have seen here. So it basically corrected this wave exactly 50% and started to rally again. So as per the daily chart, there was never any bearish sentiment. It was just a bull wave correction, and that is what we saw. Also, this was a complex triangle, which is very common for very common form for correctionary waves to take. And if that's a little too complicated, you can just forget that I said that. So basically, long story short, the daily chart is also looking very bullish for the index right now. So talking of specific support and resistance levels. On the upside, we are holding the level of 18,200 as resistance for the next week, and naturally the support is going to be the level of 17,800 and 17,600 on Nifty charts. Now let's move on to the chart of Bank Nifty. And again, as usual, I'm going to start with the 3-minute time frame. Now, on the chart of Bank Nifty, we have been waiting out for the resistance zone of 42,600 to 42,900, and today we can see that the resistance zone has been breached with conclusion around at with Bank Nifty trading at 43,000 right now. Moving to the 15-minute chart. Now the Bank Nifty is showing some negative divergence on the 15 minutes chart. So I would suggest that start using trailing stop losses strictly on your banking positions. Now for those who had attended the market session maybe 4 weeks back, I had recommended taking positions in banking stocks because the PSU bank index was showing positive divergence. The members of EXP-Invest have also been given multiple banking stock ideas, one of which has already been closed because of, again, some negative developments on the chart. So if you have active position in the bank stocks, then I would suggest that you pay a little bit caution, pay some heed to them, use good trailing stop losses. Moving to the 75-minute chart. So on the 75-minute chart, we are not seeing any negative indication per se. It looks pretty stable to me. Sure, there is some negative divergence, but this kind of negative divergence in no way suggests that the peak is going to get formed immediately and there might be correction, because Bank Nifty, I have at least observed Bank Nifty to give very long drawn negative divergences and then calling it a top. So if you have active positions, I would suggest that don't rush towards closing them right away. What you should instead do is trail them with stop losses. Now moving on to the daily time frame. Again, on the daily time frame, the momentum is pretty good, and for the resistance, I would like to hold out to the level of around 44,800 as the next probable resistance in this stock. 44,800. I mean, I feel like it's a little high, but you know, given the market momentum, I would like to give it a I would like to keep the resistance at higher, but again, you have to look out, you have to pay more attention to towards the support level, because the 42,600 and 42,900 zone has now basically become a support zone. So if Bank Nifty comes below the level of 42,600, then you should expect a strong correction all towards the level of around 40,000 in Bank Nifty. Okay, so that was a discussion of Nifty, Bank Nifty. If you have any questions, feel free to add them in the comment section. I'll take a quick look. Okay, so there are more stock specific requests which we will take up in a bit. Let's move to the intersector analysis and look at our winners and losers of this week. All right, I'll be sharing my chart with you shortly. So this is the intersector chart of our market, and as you know the drill, the white line which passes through the center is the CNX 500, which we use as benchmark to compare our other sectors, and rest of the lines represent other sectors. Now the red thick line that you can see at the top is our PSU bank, which you can see is the winner of the week with nearly 7% in gains since the opening on Monday. Close behind that is the CNX realty sector, followed by the infra sector, private bank sector, and the Bank Nifty. Now on the loser side, we see consumer durables right at the bottom. We see CNX media, CNX pharma, CNX healthcare. Now if you remember, CNX Pharma and CNX Healthcare are also on my watch list, especially for long-term investments, because a lot of counters in the pharma and healthcare sector are showing long-term reversals. So if you're wondering where to invest your money for the long term, these are the two sectors where you can find wonderful opportunities. Not only these, IT sector is also one very good sector, and for some reason I can't see the IT sector anywhere in this chart. Maybe it's gotten removed by mistake. But anyway, IT sector, oh yeah, let me just add the IT sector. I remember last time I had removed it because it was being a little difficult. Oh, there you go. We have IT sector back, and I like the IT sector line to be yellow, so I'm gonna turn that yellow. So okay, so we see IT sector has also shown a very good rally this week with around 4% of gain, and I believe the reversal that we're seeing in the IT sector is here to stay. So focus on IT sector, pharma sector, and the healthcare sector. In addition to that, the consumer sector has also been looking very attractive, the consumption sector. So you should also keep an eye out for that, for opportunities there. See, the Nifty has clearly ensued into a rally, and I'm expecting this rally to last at least till 18,200. So there's obviously a lot of money to be made in the market, but at the same time you have to be very specific about your stock picks. Usually for retail investors that becomes very difficult to do all by themselves, because analysis, execution, it's too much to deal with at the same time. So that is why I always advise to use the help of a proper research analyst. If you're finding it difficult to connect with one, I would like to invite you to join my Telegram channel, where you can post questions and also subscribe to services if you're serious about consistent trading in the market. All right, so this was a discussion about intersectors. Now I'm going to move forward with the comments that you have and take a look at what you have to say. All right, so we have Mr. Dipen. He is asking for view on Walters and HUL. So, okay, Walters is actually one of the stock ideas where I had an active call for my members, and we triggered a trailing stop loss at the price of 852 just on Wednesday. And since that happened, the stock has plummeted nearly 10%, but thankfully our profits were saved. In fact, we all made around profits of around 5% in a period of 9 days on a cash position. So speaking about Walters for the next week, I believe it is a little too soon to comment on whether it's gonna, continue the rally upwards or not, because you can see it has created this spike here, and the RSI on 15 minutes is not giving a very good indication. There is negative divergence on 15 minute, on 75 minute. The daily chart is also not feeling very healthy. So on the longer time frame, I believe Walters is moving towards a good recovery, but currently I think the base is yet to be formed. It looks like it's going to want to retest the level of 750 to 740 again, and if this fails, basically if the support of 740 breaks, then Walters can also go as low as 645, because as you can see, that is where the next trendline support lies. So for now, I will refrain from making new positions, especially for the next month in the Walters stock, and wait for some better indication or a stronger bottom. Now, another stock that you asked for is the Hindustan Unilever. Let's take a look at that. So Hind Unilever also gave a massive gap down, and same observation on Hind Unilever also, that even though it has fallen quite a bit recently, and you can see that Hindustan Unilever also we exited around 2551, but the stock has fallen dramatically. I mean, like 6%, and for HUL to fall 6% is quite significant. It is taking support at this I think it's the 500 EMA on the day of the daily time frame. That's why it is taking support, but in order to commit my capital, I like to see my stocks showing a little bit more stability. If I wanted to make a position here, I would do it with a stop loss of around 2%, that is 2390, for a target of maybe 2560 roughly, which gives me a risk reward ratio of something around 5. Now, as you can see, the risk reward ratio is less than 3. It is honestly not enough for me to risk my capital for. So that would be my view. Dipen, I hope you found that useful. If you did, please don't forget to like this video stream and leave your comment. It really helps the videos reach more audience like yourself. So we have Rajan and he's asking for view on Divis Lab. So let's take a look at Divis Lab. Alright, so Divis Lab is looking quite attractive. It seems it is reacting to the turnaround that we're seeing in pharma stocks. What I would suggest is if you want to make a fresh position right now, you should maintain a stop loss right here at the level of 3170, and you can hold the target for no more, at least the short term target, no more than 3500, maybe 3550, right? So that, from what I can see, gives you a risk reward ratio of 2% by 9%. So that's a pretty good risk reward ratio. 2% stop loss, 9% target. That looks pretty good, right? So that's a setup that you can use for Divis Lab. We have Mahesh asking about Alchem Laboratories. Let's take a look. So Alchem is already in a massive rally, and I had managed to enter near this bottom, and then I got stopped out around that level. It has rallied 5% since then, and the momentum in the stock is pretty good, but I wouldn't suggest an immediate entry here, simply because the risk reward ratio wouldn't be very attractive. If you look at the chart, it is showing a rounding bottom, but then at the same time the stock has a tendency to go up and down in waves. So it's a wonderful stock for momentum trading. So I'd suggest you wait a bit for it to come down to maybe 3400, right? Because your stop loss has to be around 3300. So right now if you enter the trade, your stop loss will be 6% and your target is also 6%. That's a 1-to-1 risk reward ratio. It's not worth risking your capital for. So wait for the stock to come back down to 3300 and then try to make an entry. All right. So another reminder that I would like to give all members is that you can book one-on-one paid consultation services with me, and you will find the link for booking that service in the comment. The advantage of that service versus this free advice is that on the service I'll be interacting one-on-one with you and giving you very specific advice with even answer to your follow-up questions in a way that suits you best. So right here you ask a question, but I'm not able to ask you follow-up questions. So the advice that I'm giving is the best understanding of, what you might need. So you can find out the link in the comment section posted by the ET moderator. Now let's move back to answering your giving responses to your comments. Okay, so we have Priyanshu. Welcome Priyanshu. You want to know about IndusInd Bank. Let's see. So like I said, banks have already posted quite a bit of a rally, and IndusInd Bank is actually close to a potential breakout zone. So look, waiting for it to cool down might lead to missed opportunity. So I will recommend you to take a trade or continue. So if you have a long position already in IndusInd Bank, what you should do is, first of all, you should trail it. And if you don't have an active position right now, then what should you do? It's so difficult because the stock is already up, and it does look like it's gonna go up, but then it can also come back down for a bit of a cool down, and you can see IndusInd Bank has a tendency to give lots of downward spikes. So your stop loss will have to be very, very big, but then there is strong resistance also. So see, even though IndusInd Bank is looking good, I am not able to recommend a fresh entry at this point because risk reward ratio is not favorable. So I'll assume that you have an existing position. If you do, please maintain a stop loss at the level of 5% from current market price and maintain a target of 10% or 11% even, because if the stock goes above the 11% mark, that is if it goes above 1300, then it will be very good even for a fresh entry. But for now, just maintain a 5% stop loss and then trail it. Don't put a upside target, just keep trailing it with a 5% stop loss. So that's IndusInd Bank analysis for you, Priyanshu. So Om Prakash ji, hello to you as well. view on ICICI Bank for Mr. Harinder. Let's see, ICICI Bank. So while you're watching the video, please don't forget to give a like to the stream and add your comments. It really helps out. Alright, so let's see. ICICI Bank is moving up in a very consistent manner. If you don't have a fresh position in ICICI Bank, honestly, okay, if you want to make a fresh position, wait, just put a buying bid around the level of 903, because again, ICICI Bank also has a tendency of, going in little bounces. So I believe it can touch the level of 903, and you can hold it for a target of around 970. That being said, you also need to maintain a stop loss near the level of approximately 880, and so try to enter at 903, maintain a stop loss of roughly 880 and a target of roughly 970. So that should give you a good setup. All right, let's move on. We have, so Mr. Om Prakash Mohan is asking about Bank of Baroda FNO. Tell me regarding the stock. So I will not recommend on the FNO bet, because most of my viewers might be aware I am a pure cash trader. When you're dealing with FNO, your style of trading, setting stop losses and targets is very different from what a cash segment analyst does. So I'm going to look at the chart of Bank of Baroda anyway for you, and I'm going to suggest on the cash setup. For FNO, I believe you'll have to ask a different expert. So again, so all the bank stocks, there's a very common observation that all of them are close to a potential resistance zone, which is roughly 3 to 5% above their current market price. And this is not an exception for Bank of Baroda as well. I believe 198 will act as a short-term resistance. Fresh entry is not recommended in any banking stock. Now, I've already answered IndusInd Bank. We have Wobble. He's asking about what is the future of Samvardhan Mothersome International Limited. What is the future? I don't know what is the future. I can tell you what the chart says, but don't really know if I can do a crystal ball thing for the future. All right, let's see. Again, momentum is super strong. It is already covering up this massive gap that it formed right here. And my short-term target would be this 200-day moving average of the daily time frame. So if you're holding it, 77.15 is very, very easy to expect. You should maintain a stop loss, however, at a level of 71.6 on Motherson. So that is what I have for you. Why is Saxoft declining? I never know why a stock is declining. I also don't question it. So Om Prakash, you have answered. Neeraj is asking about Infosys, finally an IT stock. So Infosys is looking really, really bullish, at least to me, from a technical perspective. So if you're also long on Infosys like me, then I suggest that you use a stop loss of around 1238 and continue to hold Infosys for an easy peasy target of roughly 1360, which is from the current market price around 8% up. But I believe that once this resistance is braved, it has potential to go up much higher. If you're looking for a long-term investment in Infosys, it's great to just buy and hold at this level for the next 3 years. I would expect a new high to show up on Infosys very soon. So that's about Infosys. Idea, Rana, Mr. Reddy, I'm sorry, I don't follow poor stocks like Idea. Basically on the fundamental analysis, like the corporate governance and quality of company scale, Idea just fell out of my watch list, so I don't follow it anymore. We have Mr. Arun Rastogi asking about PNB. So PNB, again, like I said, all bank stocks are pretty much close to a very important resistance point, and PNB is not an exception to that rule. In fact, PNB is closer to the resistance point than any other bank. So for all of those who've come to the market a little late and are just realizing that, oh, banking stocks are running up, let me tell you, it's in the past. Banking stocks have already run up. So you need to look for the next sector which is going to get into rally, and I have already given you some very good names of those sectors. So try to focus there. Always try to enter stocks before the rally rather than after the rally, because that's where the money is made. Okay, let's see. Harinder ji, thank you so much for your gratitude. Should one invest in stock market at this time? Akash Bhardwaj. One should invest in the stock market at all times, in any times, because the stock market is not something which works in a, straight line or the same fashion like a corporate. It goes in cycles. So it does not matter at what point of time you enter the market. What matters is that you stay in the market, catch on to the pulse, and then stay with that pulse. You can't enforce your will on the market of when you want to trade, when you don't want to trade, because if you keep dialing your own, if you keep dialing your participation in the market, you're always going to end up entering at the top and exiting at the bottom. That is what happens with retail traders. In fact, yesterday I penned a note for all my members. I'm going to share it with you. Let me just fix that. Yeah, so this is the note I shared with my members yesterday. I'm not sure if you can see it though. And what I basically said in the note is that, you have to be systematic in terms of allocation. You have to follow the trade setup, because I give trade setups to my members. You need to follow the quantity which has been calculated before you invest. Basically, you have to make sure that you're allocating capital in a proper way, irrespective of what you think in the market. For that, I also included a point about eliminating your feelings, because a lot of people trade in the market on the basis of feelings, which is not very good. Follow the system, which basically means that don't apply your own level of filtering, because what you end up doing is, in addition to my biases, which are already incorporated in the stock idea, stock recommendations being given, you're applying your own level of biases, which is way more dangerous than my biases. Okay, so don't do that. And then of course, be consistent. A lot of my members use this weird psychological dial where they like to come into the market if they're seeing stocks show profits and leave the market when they start seeing lots of stop losses. That is not the right approach, because when you're doing swing trading, you're basically playing with the probability, and when you start dialing in and out, you tend to miss out the biggest opportunities which could have been caught, right? So for instance, I gave a stock idea in this I gave a recommendation in the stock. I'll just share the screen with you again. I gave the recommendation in this stock, Indus Tower, and as you can see in the chart, the recommendation was given right at the bottom of the level, at the level of 137 to the elite members. Now, for those who would have stayed in the market and listened to the recommendation, are already sitting in profits of around 16% in just a matter of 15 days in the stock idea. For those who might have been dialing in and out, must have probably missed the stock idea, because so that is why staying very consistent in the market is absolutely important. It doesn't matter when you start, whether you're starting at 30, whether you're starting in April, it does not matter. What matters is that once you get in, consider it a journey, not a money printing press where you can go at 8 a.m., print for a couple of hours and come back. All right, sorry, that was a long answer to a short question. Mr. Om Prakash ji, and we have already answered Infosys. So incidentally, we are also done with today's session. I hope you found it useful. I had a lot of fun sharing this the analysis today with you all. I'll see you again on Monday. Until then, have a great weekend. Make sure you fix your stop losses, fill in your trade trackers, and stay disciplined in the market. On Monday, I'll bring to you a retail traders special series episode in which I discuss one aspect of the market which, if you follow and incorporate, you'll be able to become a better trader over time. All of these lessons that I share in the retail trader session are drawn from my personal experience of over the last decade. So thank you so much for joining. I'll see you on Monday.